So China's taken a very different stance to supporting its own economy. And firstly, it did an incredible job in getting the supply side back to full strength very, very quickly by putting in measures to contain the effects of the pandemic and really stimulating on the supply side. It managed to get production back up to almost full capacity within a very short period of time. And of course, in doing so, it took advantage of the fact that other regions, North America and Europe, subsequently had problems getting their supply side back on stream. So they filled the gap, if you like. So the Chinese economy was able to exploit that situation, take advantage of it, and get itself back on its feet quite quickly. And that meant that the government was able to manage the economy without having to throw the amounts of fiscal stimulus that it needed to direct at the economy following the global financial crisis. Because going back to 2008, when the global financial crisis hit, one of the first implications was a massive slump in global trade. And of course, China, totally dependent, particularly at that time, on the external environment and on trade, sought to shore up that deficit by throwing fiscal stimulus at it. This time round is totally different. Because the economy came back on stream pretty quickly on the supply side, China was able to be moderate in the level of fiscal support provided, and therefore it comes out of the crisis early and with less encumbered by additional debt. And that puts it in a very strong position to manage its financial system and its financial wherewithal, such that we're seeing now, and a clear example of it is that we're seeing Chinese interest rates significantly higher than anywhere else in the world. And that's indicative of the fact that whereas central banks have basically printed money and at the risk of weakening their currency, China has been able to hold steady and emerge from this stronger, seeing inflows of capital and able to keep interest rates at a higher level.